What is going on, guys? It is the Zoomer Value Investor here to talk to you guys today about a stock that's been on my radar and in my portfolio here in this bull market we've been seeing. I want to make sure to at least cover the basis on some tech stocks I've been interested in this past year, maybe some stuff I've been dabbling with. And this is going to be one of those. So, Palo Alto Networks, PANW on the stock market exchange here in the United States. Phenomenal company. Obviously, based out of California, as the name says here, Santa Clara. I believe which actually Nvidia kind of originates from Santa Clara. If I might be mistaken on that. Might be somewhere in that kind of similar area. But you know, phenomenal company here. As we see, could be a little high on the PE. I'm gonna talk on that a little later. Uh, I believe personally the best player in cybersecurity right now. So essentially, what's been happening and why these guys have been benefiting so much, and why I think they will continue to benefit, is the cybersecurity game has evolved. Where any company who values things like data security, user end security, things like that, for their platforms or different business dealings, they need to come to qualms with this. That cybersecurity it needs to evolve with the cybersecurity threats that have been evolving. So cybersecurity attacks, things of that nature, hacking, different types of, I believe they call it black hat hacking, where it's, hacking for a means to gain from criminals and things of that nature. And there's different types of ransomware attacks and things of that nature. And there's different types of attacks where, you don't really get a cryptographic key unless you're able to send Bitcoin or something of that nature, Monero, to a certain address, right? So the game's evolving, and companies want to stay out of these bad adverse situations, and that's where Palo Alto Network comes in, and this is where I think they're going to benefit so greatly. Particularly, there's a product called the Next-Gen Firewall that's been developed as a response to this evolving cybersecurity threat. And the Next-Gen Firewall, what's so great about that is, I guess we're going to cut over here. And the OSI model right here, now this is something that different types like network administrators and cybersecurity professionals and things of that nature always have to just run to. So, if they're, spewing about a problem, they have to ultimately go like, oh, that sounds like, a layer 3 problem, which actually layer 3 happens to be where most traditional, I guess I'm going to call them, firewalls tend to be located here on this network layer. But what's interesting is the next gen firewall has evolved as a result, and the next gen firewall, what's awesome about this is the next gen firewall can kind of dabble in the surrounding layers a bit more, like layer 2, layer 4 abilities, definitely like layer 2 abilities with like switching and things of that nature. Lots of next gen firewalls have some form of intelligence for those mechanisms in how information is sent and transferred in things like computer networking and cybersecurity, all those different types of IT fields. So, uh, this is where Palo Alto Networks, I personally believe, leads the pack, and I think they pretty much kind of just own that security kind of like niche of the market, and especially in the commercial sense of the market, where it's like if you're a business worth any of your salt, it's almost kind of looking like you need a company like Palo Alto Networks to kind of like check over your different network infrastructures and your firewalls. So I'm gonna cut over here. This is the website, obviously, and some stuff I wanted to talk about here. I believe down here, or if not, it was the next page. It's probably the next page over. Yeah. So their next gen firewall, they have their cloud next gen firewall, but there's also VM series, which stands for virtual machines. It's slightly different than how cloud is kind of like everyone's resources. A virtual machine is like, as it says, a virtual machine. It's kind of like a system you can run processes and do things with. So really interesting. They have different products of all the things, but everything is focused on one thing: is security and firewall technologies. So um, they make most of their money based on like the different platforms they can sell to different businesses and things of that nature. And they have 3 or more platforms, and the more and more they can sell these platforms to different businesses, excuse me, they will exceed, and they get greater AAR, annualized revenue. And these are, I think, phenomenal numbers. I really wanted to showcase here. Just kind of like over their career. And I love how this is updated daily here. And you can see 1 trillion cloud events processed, just how much network traffic and things of that nature that they've supervised and been a part of securing as a business ever since they've been established. I'm gonna go ahead and I guess I'm gonna cut into valuation here. So one last thing I want to talk about before valuation actually is, while we were talking about products also, there's been something called Internet of Things. And what's so interesting about Internet of Things is, I believe, and I saw this actually on an interview with the CEO, is that it's cutting into a market where um, essentially there's so many different things that need to use the internet nowadays. For example, different the meme kind of is like a refrigerator, but I guess a more realistic example would be something like a dam infrastructure that needs to kind of regulate at what certain times to release the water and what certain times to retain water. And something like that might be connected to something like a network time protocol. And that way it can regulate time better than any human could without that kind of like functionality of human error. What if there is some weird thing where it's like you release the water 1 minute too early, 1 second too early? Who knows? This obviously matters with things like sending electrical currents and things of that nature. Maybe it's a little bit more forgiving in my example, where we're just sending like water around to like dam different like river infrastructure. But uh, you wouldn't originally think that a dam might use something like internet or could be susceptible to something like a hack through the internet. But to do something like tell the time, it needs to maybe leave something like a port open, like a port 123, which does like the network time protocoling. And then it's like, could, hypothetically, a hacker could maybe break in through there, start messing with a different like plant infrastructure. And you know that's something that a next gen firewall could obviously prevent. It would be able to stop those different like avenues of traffic and prevent something like that. So I think that's huge for this business, where there's things you might not think about at first, but I ask you, the audience, to think deeper. What is actually all connected to the internet nowadays? Think about almost like anything connected to the internet, and there's potential that at some point, something like Palo Alto or some other security companies I might discuss later in this video, their business market might have to cut in there at some point, just for like the future structure, infrastructural integrity of our society. Unless we want society to be built upon a frequency of cyber attacks and cyber criminality, which I don't think anyone wants, these companies have a pretty large runway, it seems. So I'm gonna go ahead and cut here into the valuation. Um, Obviously, as I noted, I said it'd be very high. Now, I personally don't believe that this is a great time to add this business. Maybe I should have talked about this in the beginning of the video, but obviously this is, never talking about financial advice on this channel. This is just entertainment qualities. I do personally own a little bit of this position. I have about like 2% of it in my personal holding, but I used to own more. I bought around between like this 250 to 270, kind of like around here, is when I got into the stock. This is when I got like really interested in it, somewhere around here, like last fall. And I took profits early on some of it. It used to be something like a 3.5% position. I wanted to make it more like 5 to 10%, but it never kind of got as low as I'd like it to. And I'll talk about what levels I think it could get to for buyers in a second. But have it then I cut about 2% here, and now it's back to around that price now, around 320. So it's been as high as 380, which is really interesting. But back to where I sold my initial amount at, and I don't really regret selling it. This is going to be a very high risk growth stock in anyone's portfolio. You kind of have to treat it with that mentality if you're an investor, where, if you want to hold on to your money, you want to feel secure about your money. I don't think it's a good idea to make this something like 50% of your portfolio. I think maybe you want to consider something like 50% allocation in a VOO instead. But I'm comfortable with 2% for sure, and it was a nice healthy profit taking. I got a good amount of good chunk percentages gain in the matter of a few months, which is obviously awesome. So definitely will take that. I think for buyers, cutting down to around the 250, 270 kind of level, somewhere in between where it was in like November. I think that's very much possible. I wouldn't underestimate the capacity for a stock like this, especially on this valuation, being a inherently high risk growth stock, to just kind of cut and have frequencies of maybe a 20 or 30% swing, anyway. So don't take that out of the cards and treat that with a grain of salt. But this is phenomenal results here: 371%, 372% over the course of the past 5 years. And as you see here, the valuation, it is a little bit stretched. I do like to look at it over the course of maybe the past 5 years. See if we can zoom it out a bit. There we go. It's a little bit better. So as you can see here, trades a pretty high price of sales, but the price to earnings ratio wise, not a stretch. And I'll actually go into that a little bit when we look at the balance sheet, the amount of total debt on the company, and you'll see there have been some good changes, but then also, yeah, the company, especially in its current state, I don't think it's so much of a buy; it's more of a hold and or you watch list a company like this at this time, in my honest personal opinion. So but I also am really interested because it seems like they've also recently turned to profitability. It's one of those companies where they're kind of getting out of like the growth stage and they're starting to actually turn profits in certain segments of their businesses and be able to show some profits on different earnings reports, which is really really interesting. It almost reminds me of when Tesla had that crazy swing a couple years ago, right? When Tesla started declaring itself a profitable company. So I also kind of want to showcase, since I already showed y'all some of these valuation numbers. Well, I look over some other things I really love to look at here on this ticker terminal function. Some analyst estimates. Do financials. Can see here some data about how they've grown over the past 2 years. These total revenue change years over year. This is kind of why they have that hefty valuation. Is a normal business is not able to increase their ARR like this so heftily. And it's the duality effect of not only are they increasing their revenues heavily, they're getting more profitable as a business. Their EPS and things of that nature, their ability to be a profitable business is also increasing. And that's one of the things that's really beneficial for these scaling up technology companies is oftentimes these tech companies um, their margins could be quite impressive, and what degree they can have good margins on their profits. It can be impressive because oftentimes the product is what they're selling, and they can get good at selling that product at you, different ways of providing it at lower costs and things of that nature, but still inherently providing a strong product to the consumer, and then they have higher EPS. So it's a dual whammy of the higher EPS and the increasing revenue is what's really, I think, kind of supporting this premium. But the other aspect I would say of the premium of why does this have like a 46 PE or whatever it is, when you look at it on Google, um, is it's really the high quality of the business, right? There's something about the business, about the product, what people know about the product in the industry is very high quality, and I would tend to agree about that. So one company I think is really interesting. I kind of actually have a personal example. This is a competitor, obviously, is Fortinet, and I don't really think of Fortinet as high quality. Um, so I see are kind of like similar numbers. Also been benefiting from the cybersecurity trend, obviously. Valuation. Take a look over here. And at first, this looks like okay, like this is the value play in the industry, and I think Fortinet personally is a little bit of a value trap actually. And I think why is because I just don't think their products are as good. I tend to read a little bit more people complaining about their products and support and things of that nature. I have a bit of a personal example. At one of my old jobs, one of the patch panels, when I was just kind of doing my own job, I was hands off. I was not involved. I just did something I saw, and I'm anonymously reporting it now, I guess, where a patch panel was just swung open and there was just like a Fortinet device just left open with all these different like USB ports and stuff in it. And I was like, okay, that patch panel should definitely be secured and belted down, and it's not right now. So I don't know if that was Fortinet's fault or anything, but if you know anything about cybersecurity and stuff like that, when you have critical network infrastructure like that, and it has like open port slots in the machine itself and stuff, and the physical security around it is not all the way like well managed, then that's kind of a red flag in security. So yeah, wild. That ever since I saw that, I've just been like, wow, I just can never look at Fortinet on the market the same ever again. Um, And these numbers look nice as well as I would say they have been a profitable company longer than they're not on that like swing as much as like a Palo Alto is. And I think that kind of is why maybe the value investors are more attracted to it. Um, there's a little bit more of like a settling in the kind of numbers, the valuation metrics, things of that nature, because they've been a profitable company longer, and you're not doing all this hypothesizing and stuff of like, okay, so when they become profitable and when these numbers change to this, and some investors just tend to stay out of scenarios like that. I personally believe, in the modern era and stuff like that, with what we've seen in like Nvidia and things of that nature, and Tesla and stuff, I'm kind of cognizant to try to not leave those gains on the table if I see them, and particularly just focus on the quality of the business. And I do think quality is here for Palo Alto. One other one I want to talk about is CrowdStrike. A little bit similar. I don't think they're as firewall heavy, but definitely different network infrastructures. Maybe if not firewall, I wouldn't be surprised if they do firewalls. But I actually did kind of like nibble just like a one share of these that around like 120 or 150, something like that, like a couple years ago. And it's done quite well since. And I just kind of have it the personal holding. It's like a very, 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 it's like a point, like whatever percent holding. It's just kind of like there, just kind of for fun. I like to see it. And it's like a tracker share also, too. I'm that much interested in this company. So, yeah. And I think what's interesting about this is you look at this one, it's like, oh, okay, price to earning of this. And I kind of actually, I really want to like type it into Google now here, see what Google is saying, just what they're, yeah, 728. So exact same numbers. Makes sense. So yeah, when you see another company having this valuation, it kind of puts into a PE of 721 or 728, whatever it was. It puts in perspective Palo Alto having, a price to earnings like 48, and just kind of how absurd cybersecurity is right now as far as like on the market. But I think that also kind of just shows the ludicrousness of the market. And I don't think it's as, you can maybe look at these valuations and go, bubble, it's a bubble. I want to avoid it. And I just like, we're not in the year 2000 anymore. This is 2024. This is a whole different economy. This is a whole different world. Uh, the tech is a little bit more here now. I don't. I I feel like I sound like Kathy Wood, but actually, this is like a Kathy Wood quote. She said like the seeds of the tech bubble were they were seeds. That's what it was. Like the tech bubble, it was a seed of something later to germinate. So um, I know she uses that analogy. I really don't. I'm not like a huge fan of her, but I think that this is a pretty legit industry. I don't think there's a ton of tech things I get super excited about. I get super like, I've seen a lot of like the Wall Street bettors talking about companies like SMCI and like all these other like weird things. But some things, and cybersecurity, that's one of them. I tend to be a little bit more bullish on it. Financials here. Um, really want to just kind of show off this stuff. I don't want to take too much more of your time. One thing I really wanted to focus on was the balance sheet here, where we're going to see the debt. And as you can see here, they've grown this pretty nicely, the amount of assets, but the debt they've been able to manage quite well and just kind of delever. So really impressed by that from the business and the management. Um, and the share dilution doesn't really seem like a huge deal. I'm wouldn't be too surprised if they're paying some employees some shares of stuff, but uh, I've done quite well with Palantir, and I remember that was the whole thing with Palantir, right? Was the share dilution, and but that is the price you pay to retain talent to some degree, especially at tech companies like this. Uh, yeah. So this is really I'm really just going to show this one slide from the business presentation. I would encourage looking at this though, 100%. Um, yeah, look at these numbers of how they've grown revenues and stuff, especially these year-over-year numbers, guys. Like this is a pretty serious industry. And again, like caution, I wouldn't buy this today per se. But imagine, you're not buying this business at 320. There's some like hullabaloo that happens. You get this at like the price it was at on October 13th of last year at 260 or whatever. Like hey, that's that's like a 25%, 20% haircut or so on the business. Like that's it's a little more enticing now. So that's kind of why I'm making this video. I'm doing a little bit of due diligence, but also just kind of remind you guys like don't get too giddy about this business. Kind of just watch list it. I do think it is a little bit expensive, but it becomes really interesting even on like a correction or anything of that nature. I think it'd be really great to add a business like this. So I'll go ahead and end the video on this note. I want you guys to check out some other videos from some other creators who I think are phenomenal and put out some phenomenal stuff about this business. This is Stone Cold Investors. Great video about Palo Alto, and also I would encourage to watch the Fortinet video also, because in the Fortinet video he talks a little bit more about like what firewalls actually do and things of that nature. He has experience from an actual professional, job experience doing this type of stuff. So I think it's really cool to hear his perspective, and I think he's really good also at doing things like valuation modeling, and I think there's a lot you can learn from that for sure. The other one I would encourage you. This is, I think, both these are great channels to actually just follow in general, both Stone Cold and this channel right here, Chip Stock Investor. But yeah, they put out a great video just a couple of weeks ago about Palo Alto Networks. Definitely encourage watching that. That right there, that's like 22 minutes of content right there, and that's like another like 15 right there from Stone Cold. So go get after it if you still want to watch any more YouTube. But hey, thanks for sticking around this long. I'm the Zoomer Value Investor signing out. Peace.